Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets hidden in plain sight within corporate filings. And in this report, United Airlines is showing us exactly how they're navigating the ever-changing skies of the airline industry. So buckle up because we're about to decode their latest quarterly performance. Before we dive deep into the numbers, let me give you a quick snapshot of what this filing is all about. This is a quarterly report from United Airlines Holdings Incorporated and its subsidiary United Airlines Incorporated. It gives us a look at their financial health from July through September of 2025. Think of it as a mid-year checkup for a giant airline. Now, United Airlines Holdings Incorporated and United Airlines Incorporated operate pretty much as one big entity for financial reporting purposes. United Airlines Incorporated is a wholly owned subsidiary of United Airlines Holdings Incorporated, and it represents the vast majority of the company's business. So when we talk about United's financials, we're essentially talking about United Airlines Holdings. Let's start with the most crucial part, the income statement. This is where we see how much money they made and how much they spent. For the third quarter of 2025, United Airlines brought in a total operating revenue of $15.2 billion. That is a nice increase from the almost $14.8 billion they made in the same period last year. That is a nearly 3% jump in top-line revenue, which is pretty good in today's world. The main driver of that revenue, passenger revenue, which was $13.8 billion for the quarter, well above the $13.5 billion from last year. People are flying and they are paying for it. Cargo revenue also saw a modest increase, going from $417 million to $431 million. It is a smaller piece of the pie, but still contributes. And then we have other operating revenue, which really jumped up from $865 million to nearly $1 billion. That is a solid 13% increase, and I'll dig into that a bit later. Now let's talk about expenses. Total operating expenses went up to $13.8 billion in the third quarter of 2025 from $13.2 billion a year earlier. That is a 4.2% increase in costs. A big chunk of that increase comes from salaries and related costs, climbing from $4.3 billion to $4.5 billion. This is likely due to more flights, more employees, and potentially higher pay rates. Landing fees and other rent also saw a significant jump of over 15%, going from $866 million to over $1 billion. This makes sense as more flights mean more fees at airports. So with revenues up but expenses rising even faster, operating income saw a drop. It fell from $1.5 billion in the third quarter of 2024 to $1.3 billion in the same period of 2025. That is about a 10.8% decrease in operating profit. Interestingly, non-operating expenses net went down significantly from $279 million to just $141 million. This was mostly due to lower interest expenses. They paid down some debt, which is usually a good sign. This led to a slight dip in income before income taxes, which came in at $1.2 billion compared to $1.28 billion last year. And finally, net income was $949 million for the third quarter of 2025, down slightly from $965 million in 2024. This translates to basic earnings per S-share of $2.93, which is the same as last year, but diluted earnings per S-share dipped slightly to $2.90 from $2.90 last year, a tiny decrease. Looking at comprehensive income, which includes some items not reflected in net income, we see a slight overall decrease from $953 million to $930 million. Now let S shift gears to the balance sheet. This gives us a snapshot of the company S assets, liabilities, and equity at a specific point in time. As of the 30th of September 2025, United Airlines had total assets of $76.3 billion. That is up from $74 billion at the end of 2024. Current assets, which are assets expected to be converted to cash within a year, stand at $18.1 billion. Short-term investments are a big part of this, a healthy $6.6 billion. Their operating property and equipment, the airplanes, the hangars, all that good stuff is valued at a hefty $44.9 billion. The company is clearly invested in its fleet. On the other side of the ledger, liabilities total $62 billion. Current liabilities are just under $27.1 billion. A very interesting item here is advanced ticket sales, which stands at $9.3 billion. This is money collected for tickets that haven't been flown yet, and it is a significant increase from $7.5 billion at the end of 2024, reflecting strong future bookings. Long-term liabilities, including debt and leases, are substantial at $20.8 billion. Stockholders' equity, which represents the owner's stake in the company, is $14.3 billion. This also shows a nice increase from $12.6 billion at the end of 2024, indicating a stronger financial position for shareholders. Cash flow is vital for any business, especially an airline. For the 9 months ending the 30th of September 2025, United Airlines generated $7.1 billion in cash from operating activities. This is slightly down from $7.2 billion in the same period of 2024. Investing activities used up a lot of cash though. Capital expenditures were nearly $4 billion. This is consistent with the heavy investment in property and equipment seen on the balance sheet. They also spent $6.4 billion on short-term investments. Overall net cash used in investing activities was a significant $4.7 billion. Financing activities saw them issue debt and other financial liabilities, raising $485 million. However, they paid down much more debt, $4.1 billion. They also repurchased about $610 million of their own stock. This resulted in net cash used in financing activities of nearly $4.4 billion. The combination of all these activities led to a net decrease in cash of about $2 billion for the first 9 months of 2025. It is important to understand how these companies are structured. United Airlines Holdings Incorporated and United Airlines Incorporated are presented together. United Airlines Incorporated is the main operating company and its financials pretty much represent the whole group. What is interesting is that the company reports as one single segment. This means the chief executive officer, the top decision maker, looks at the whole company's performance together, not breaking it down into different business units. Let's look at revenue by geography. Domestic revenue, which includes us and Canada, was $8.9 billion for the quarter this year. Atlantic revenue was significant too at $3.4 billion. Pacific and Latin America also contributed nicely to their top line. The company recognized about $5.8 billion of passenger revenue for tickets that were already sold, but not yet flown in the first 9 months of 2025. This highlights the power of advanced bookings. Ancillary fees like baggage fees, seat upgrades, etc. brought in about $1.3 billion in fees for the third quarter. That is a good chunk of change. And then there is frequent flyer deferred revenue, which is essentially the value of points and miles earned by customers. This balance is over $7.7 billion, showing the loyalty program's massive scale. When it comes to earnings, per S-Hair, United saw basic earnings per S-Hair steady at $2.93 for the quarter compared to last year. However, diluted earnings per S-Hair saw a slight decrease. A point to note here are warrants. These are essentially options to buy stock. They had a dilutive effect, meaning if exercised, they would increase the number of shares out there and potentially decrease earnings. Per S-Hair for existing shareholders. They exercised many of these warrants in 2025. United also bought back about 7.8 million shares of their own stock in the first 9 months of 2025, costing them over $600 million. This can be a sign of confidence in the company's valuation. Accumulated other comprehensive income or loss represents unrealized gains or losses on certain investments and other items. For United, this is a positive $123 million, which is an improvement from the prior year. It is good to see this growing. Let's talk investments. United has a significant amount in short-term and long-term investments, totaling over $10.6 billion. Many of these are in corporate debt and US government agency notes. They also have about $50 million in equity securities. And importantly, they have $1.2 billion in investments in affiliates and other, which includes stakes in other airlines like Azul and Mesa Air Group. They are expanding their reach and influence by investing in other players in the industry. They mentioned a restructuring agreement with Azul and a potential merger involving Mesa and Republic Airways. This shows they are actively managing their strategic investments. Debt is always a big topic for airlines. As of the 30th of September 2025, total debt is around $21.5 billion. They did make some significant debt paydowns. In July of 2025, they redeemed $1.52 billion of senior secured notes. This is a positive move, reducing their financial burden. Looking ahead, they have significant debt payments due over the next several years, a total of over $21 billion. Commitments are also key. United has massive commitments for future aircraft purchases, totaling over $54 billion. This shows their long-term commitment to expanding and modernizing their fleet. Specifically, their purchase commitments for aircraft and related spare engines are very high. They also bear risks associated with changes in tax laws and increased costs for lenders on floating rate debt. Scro Labor Relations C-Center, the company, has a large workforce with about 82% of employees represented by labor organizations. They reached a tentative agreement with the flight attendants. Union, which included a significant ratification bonus of $561 million. However, the agreement was not ratified, and negotiations are expected to resume. That labour agreement also led to some special charges. In the 9 months of 2025, they recorded $561 million in special charges for that labour bonus. They also recorded gains on sale of assets like selling planes and leasing them back, which offset some of those charges. Now let's talk about the company's outlook. United is clearly focused on its United Next plan, aiming to expand market opportunities and grow operations. They are facing intense competition, volatile fuel prices, and global economic uncertainties. The airline industry is always a tough business to be in. Scroll Governmental Action's Psi Center, they also have to deal with complex regulations here and abroad. Things like airspace closures due to conflicts are a real operational challenge. Delays in aircraft certification, especially for newer planes like the 737 MAX 10, are also a concern. Looking at the third quarter of 2025 versus 2024, total operating revenue increased by 2.6%. However, operating expenses rose by 4.2%, leading to a decrease in operating income by 10.8%. On the positive side, they flew more passengers, up 6.2%, and saw more revenue passenger miles, up 6.1%. Their passenger load factor, the percentage of seats filled, was slightly lower at 84.4% compared to 85.3%. This means they had more empty seats. And importantly, passenger revenue per available seat mile PRASM, which measures revenue efficiency, decreased by 5%. This indicates they might be lowering prices to fill those seats. For the first 9 months of 2025, net income actually increased by 6.7% to $2.3 billion from $2.1 billion in 2024. Cost per available seat mile CASM slightly decreased by 1.9%. Which is a good sign of cost control. Fuel prices also decreased by 11%, which is a significant cost saving for an airline. Scroll Liquidity and Capital Resources Center United has a healthy liquidity position with over $13.3 billion in unrestricted cash equivalents and short-term investments. They have a $3 billion revolving credit facility available, and no borrowings were outstanding on it. Their overall debt is significant, but they have been actively paying it down. Sente 10 billion reals 5-to-1 trading arrangement Thai Center. Now for a little insider scoop, the CEO J. Scott Kirby adopted a trading plan for selling some of his company's stock. This plan allows him to sell up to 220,000 shares over a couple of years based on preset rules. Center conclusion T Center. So what is the big picture here? United Airlines is navigating a challenging but growing market. Their revenue is up, driven by passenger demand and smart growth in other areas like their loyalty program. However, increased operating costs, especially salaries, are eating into profits. They are making smart moves by paying down debt and investing in their fleet and strategic partnerships. The slight dip in per S-hair earnings and load factor is a concern, but not a red flag yet. They are managing their costs well with lower fuel prices and improved CASM. The labour situation is an ongoing story to watch. Overall, United appears to be on a solid path, but they need to keep a close eye on controlling expenses and maximising revenue efficiency as competition remains fierce and global uncertainties loom. Alright, that is our look at United Airlines' latest financial report. What do you think of their performance and their future strategy? Let me know in the comments below if you found this breakdown helpful. Please give this video a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description. Thanks for watching, and I'll see you next time on Corporate Decoder.